Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me is my co-host, CoinDesk contributor, Lawrence Lewitton. Happy Tuesday, Lawrence.
Hi, happy first full day of spring, and if you listen outside, you can hear them mowing my lawn already.
The grass is growing, the birds are chirping, the sun is out. Let's take a look at the crypto markets. And the
blasting way too early.
All right. All right. CoinDesk Bitcoin price XVX index right now. Bitcoin is up it's trading pretty flat, $28,268. The CoinDesk Ether price ETX index at 1811 is in the green, just over 1%. And the DFX, CoinDesk's DeFi index, is at 130, losing about 2.6% over the past 24 hours. The most reliable reference prices for institutions in 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So Bitcoin is teetering above and below $28,000, Lawrence. Investors are eyeing the central bank's next interest rate decision on Wednesday.
And 25 basis points is what the market is betting the Fed will increase the Fed funds. We have an 85% probability of a 25 basis point move. Think about that. And then the other 15% probability that the Fed does nothing. Now think about this. Just a few days ago, the market was kind of sort of split between 50 basis points and 25 basis points. But you know what happened? I don't know, financial crisis of some sort?
Banks, went under.
Yeah, mini. It's not the great global financial crisis of the aughts, but it's nonetheless the start of something, who knows?
Relatedly, we also have some news this morning from the Wall Street Journal reporting that Coinbase told clients it's no longer supporting Cygnet, the real-time payments network of failed Signature Bank, which is critical infrastructure for many crypto companies in order to transfer funds, really critical on and off ramps.
And it's been kind of nuts because Cygnet, of course, has to be administered and people have to update it and check it. It's like Twitter, right? When you fire all the engineers at Twitter, and then things start breaking, like we know happened. And there's some complaints now about Cygnet having some issues, to be sure. But yeah, Coinbase is not going to be a customer.
Our first guest happens to be from an exchange and knows a little bit about dealing with U.S. regulators. Let's talk to Stephan Lutz. He's the acting CEO and Group Chief Financial Officer at crypto exchange BitMEX. Stephan, thank you for joining us. So we're just looking at the news of the day. What are your thoughts on these bank collapses and their impact on crypto exchanges right now?
Well, for me, it pretty much shows that something is going on, right? I mean, we have seen stuff coming out of the news already in the last month. We had speculations, and now we see that the quantitative tightening of the last couple of months, which was basically a very sudden pivot, led to some problems here. So we're basically back into quantitative easing, and even a Fed rate hike of 25 basis points of bips would be overcompensated by the backstop facilities we see. And this is what you see in the crypto prices, especially Bitcoin and Ether. So the news right now, if you're really a crypto exchange being focused on A, derivatives, B, security, and then staying in the crypto space, so not being tied to So if you're really a crypto exchange that A, focuses on derivatives, B, is safe and segregates client assets, and C, has limited to no connections to the fiat world, is really striving. That's what we see. We see actually rising volumes and ADVs. We see a risen market share over the last 2 to 3 months with BitMEX, because the current market situation is actually what BitMEX originally was built for by our founders, if you remember Mt. Gox. And the second one is we are following that pretty well. And since the end of last year, we think we have been through the valley of death, so to say, and we see positive signs in the market, and we are able to reaping those benefits. And we are very grateful about that the ecosystem and the community trusts us as a real crypto exchange that is focused on crypto.
Mm-hmm. What do you think will happen to exchanges that are depending on and off ramps in the U.S. banking system? Is there going to be pressure on crypto companies to go ex-U.S., to go offshore? And is that something that BitMEX has been working on?
Well, as you might know from our past, we don't serve U.S. customers and the U.S. market at all. So this is the result of what BitMEX went through and the founders of BitMEX went through. So we learned our lesson. I believe that crypto exchanges, especially in the US, will need to look at how they approach things. It will be quite a bumpy ride for the next couple of months. And they will need to frankly decide on which side they're on. Are they more going towards classical TradFi banking business, or are they staying in the realm of crypto and being really focused on crypto, which frankly we did, and we follow suit. So as said, we haven't been in the US for a long time right now, so we have a very strict policy there, and we are not bound basically to the US banking market, which for now is a good thing for us.
How did the rising interest rates affect leverage on BitMEX? I mean, it's one would assume that it gets more costly to borrow funds to do leverage. Do you see that affecting volatility in crypto over the next few months? It maybe not currently, and perhaps you're not seeing remarkable change in leverage, but do you think that will have a long-term effect and dampen volatility?
Well, I don't think so. And this is due to the fact how leverage works in the crypto space. Leverage in the crypto space, at least if you're on the exchanges, doesn't work like in the traditional financial world where leverage really is leverage. So leverage just means how much accelerated is the usage or the gain of your collateral, right? So, and if you run out of collateral, you will be liquidated, which means your risk is limited and the risk of your counterparty is limited too. So there is, if you run a proper, as we think we do, and we have proven to do so. So it's the third crypto winter, and BitMEX is still here, and we know, we are battle tested, we know how it works, and how to not lose the coins. So it basically means you cannot lose more as you have put into the exchange, and your counterparty basically will always be sure that they can win, right? So there is nothing that you run into a problem like in classical banking and trading, where you can have, because of leverage, like for 12, 24 hours, a huge overdraw facility that then is not covered. This actually shouldn't be possible in any sound crypto exchange. So this is one. So I don't think that the current situation that we had or that we will have a real impact on leverage, because it's more leverage on crypto exchanges is more driven by the risk appetite of the investor. What we see is that because of the events of the last year, some funds have been diminished, right, by investors. So they are cautiously looking at the market, and you have kind of a flight to quality back to Bitcoin, Ethereum, and let's say 4 or 5 other big coins in the market. That's what we see. So we see a lot of caution around altcoins, and that might not go away for the next couple of weeks or months. But in the quality segment, we definitely see that interest has risen again.
And as well, I mean, getting back to sort of like the issue of banking, how safe do you feel are your funds with the banks that you use? What kind of banks do you use, and what are you ensuring that, you know, obviously this is so far a US-based crisis, but we've seen it in Switzerland as well, that there are some questions with some of the banks there. And again, getting back to the question of interest rates, what we found, at least in the US, is that many of these banks have not quite figured out how duration works. And because of that, we're seeing these crises. What are you doing to ensure that your customers can get access to funds in case of the crisis spreading, and how safe are they, and how secure are they based on what you know of the institutions that you use?
Okay. Well, in terms of security or safety of the funds of our users, BitMEX was built to make sure that actually client funds and house funds are segregated. So our system works in a way that if there was a commingling in the accounts, it would stop working. That's number one. So this is nothing that, can be tested unless you look into our systems, but this is what we can make sure that people have. What we then on top do to prove that is we have been one of the first exchanges who introduced proof of reserves. We actually did it already in 2021, and it didn't receive great interest then. We got it out. We have proof of reserves, proof of liabilities multiple times a week, right? So it's really there, and we can prove that the funds are there, and they can be withdrawn basically after risk check with us. So they are there all the time. So it's not a fractional reserve banking type of business model. It's fully backed by reserves.
But my question isn't so much as because we had USDC have proof of reserves basically, and yet they still, because they banked with Silicon Valley Bank, there were questions as to whether or not they could get those reserves out to redeem their customers. The funds could be there, but if you can't access it because the bank is folding, it of course is a problem. What are you doing on your end? Or how much due diligence and how much contact have you had with your banks to make sure that they can actually supply the cash when you need it?
Well, that's pretty easy because we don't have any connections to classical banks for custody of our crypto funds. All of the crypto funds are in our own cold wallet, crypto custody solution. So we haven't had any exposure to Silvergate, Signature, Silicon Valley banks, or the likes. So that means we are fully independent of that system, and that adds increased security and safety for our clients.
All right. And BitMEX is out with a report, and I guess that goes to a section of that report, which is building transparency and trust. Tell us a bit about your crypto outlook. You have fundamentals versus sentiment, 3 scenarios to watch out for in 2023. Maybe you can outline for us what those scenarios are and which of them you see most likely happening.
Yes, sure. Just some words before we compiled this report, over a couple of weeks and months. So this is not something that we came up with yesterday. And the funny thing is, everything you see in the report happens right now, which we didn't expect, frankly. So we came up with 3 scenarios. We thought in 2023, we will have one of 3 more or less mutually exclusive scenarios. Scenario number 1, we go back to quantitative easing, more money supply, which drives inflation, which then drives crypto prices to the extent that you use your crypto, so Bitcoin in particular, as an inflation hedge. So, and that we see right now, right? It just happened over the last 2 weeks. The second one, we saw caution continues, meaning that people stay aside. They rather wait and see before going back significantly into crypto. And we have basically a sidewards movement. Still, I think part of that is true because for many of, let's say, the second half altcoins, right? So the second half of altcoins is really in that scenario still. And then the question whether crypto just became a safer asset class refers to the fact that we saw the likelihood that some jurisdictions will figure out how they will deal with crypto regulation and therefore provide certainty for investors how to deal with it. We see that in some areas of the world. So you see Southeast Asia, you see Hong Kong evolving, you see the Middle East with Dubai basically making their mark. You see even in the European Union with the enactment of the Markets and Crypto Assets Regulation, MiCA, that they at least go forward and provide a basis to operate, right? So funnily, all of those now work at the same time. We have an increased risk appetite of investors because of the quantitative easing for quality crypto assets. We see still caution for the old coins. And as well, we see some movement in the regulatory space to provide bigger clarity or greater clarity, for operators as well as for investors, which will increase the transparency as well as the trust in crypto players.
So Stephan, I have to ask, when it comes to this recent rally that we've seen in crypto, is it so much as a flight to quality, as you would say, or a flight to safety, or is it the fact that the Fed may not raise rates as high as expected? As we said earlier, they're expecting 25 basis point increase in the next 25, 26 hours. I don't remember how many hours we have left, but by tomorrow we'll know whether or not the Fed raises rates. The market anticipates 25 basis points. A while ago, not so long ago actually, 50 basis points was almost the consensus, just because we saw these inflation numbers. Has the market taken on more of a risk appetite, and that explains the rise in crypto? Or is it an exit out of stable coins, for instance? What exactly are we seeing in terms of why we're seeing this current rally? I'm talking about the very short term.
My strong belief is that it's all of what you said. You see, first of all, which is the most visible one, a reduction of the expectation of further rate hikes. So we have the rate hike will be lesser than expected. Plus, and this is the big thing, it's the quantitative easing in the background via the backstop facilities for US banks, which is overcompensating even if you would have a 50 basis point rate hike from my point of view. That is number one, right? And then you see as well the movement from stable coins into Bitcoin, which for me is, if you are a crypto guy, that's a flight to quality, because Bitcoin is there to stay. And as we have seen in stable coins, they are necessary. We need them in a way to make the markets work. But at the same time, they have more risk than just the market price risk or the pack risk, right? You have the pack risk, but then you have the risk. Where are the funds? Are they accessible, as you have said earlier? So you have all of what you said, and it's amalgamating into that recent rally we have seen that was significant over the last couple of, days, or let's say 2 weeks.
Just one last question before we wrap up. I just want to ask you about BitMEX co-founder Arthur Hayes. He's proposed the Nakamoto Dollar, which is a stable coin backed by Bitcoin and Bitcoin derivatives, which would theoretically be deeply liquid and attractive to traders and provide stability if accepted and used by investors in crypto exchanges. What are your thoughts on that?
Arthur's idea is a natural one if you think about it. So you need to have, at the current state of the crypto market, a unit of account that's not fluctuating heavily with the market, just to make your accounting more easy, right? And make sure that you can switch between venues so that you have kind of some, stuff that oils the machine. At the same time, the issue of stable coins is a regulatory risk, and then the accessibility of their coverage funds, right? Which has nothing to do with the functioning or what they have been invented for. So, and then coming up with the idea of have that Nakamoto Dollar, which is basically a stable unit of account bound to the US dollar in terms of exposure, but without having the risks of the current stablecoin system, is an innovative one that we believe, if it's followed, and there will be people who take up the idea, because it needs to be a decentralized idea in a way to make it credible, then it will really be, or can be, a game changer in the whole crypto industry. All
right. Stephan, thank you so much for joining us. That was BitMEX acting CEO Stephan Lutz. Coming up, we've got a crypto markets update with algorithmic crypto trading platform CoinRoutes next. All right, let's check in on the crypto markets. The CoinDesk Bitcoin price XVX index currently at $28,139, losing about 0.1% over the past 24 hours. The CoinDesk Ether price ETX index at 1813, rising about 1.7%, and the DFX CoinDesk's DeFi index at 131 in the red, about 1.8%.
It's an exciting time in the crypto market, and joining us now to discuss it is Dave Weisberger, CEO and co-founder of algorithmic crypto trading platform CoinRoutes, not algorithmic stating. No, it's not that. Welcome, Dave.
Thank you. It's great to be here.
Good seeing you. So we have a lovely chart here of Bitcoin rallying about 40% in the past 10 days. Recently hit a 9-month high above 28,000. Matrix reports that American buyers are what's driving this rally right now. What do you take here? Is it a flight to safety? What's going on?
I mean, look, let's be very clear about what's going on. Bitcoin's primary use case that people are looking at is as an alternative to fiat dollars as a store of value or preserver of wealth or increaser of wealth, if one looks at it. That's the primary use case. It trades like an option, has traded like an option for years on its own adoption, because when you do the math and you look at Bitcoin as if it achieves that goal, it would more or less be, the word demonetize is often used with regard to gold, but basically if it achieves the market cap that gold has that's related to its monetary purpose, it would be somewhere in the neighborhood of 500,000 to $1 million. And despite a few people making outrageous claims that we'll get there in 90 days, the reality is the likelihood of Bitcoin achieving that critical mass has never been higher. And the impetus behind what's going on is collapsing credibility of the fiat system, because here we go. We went from, in the space of 2 weeks, from raising rates and choking liquidity out of the system to defend the integrity of the dollar, to Janet Yellen yet last night essentially saying, listen, there are, I think some stupidly high number, 16 to 18 trillion in bank deposits. We'll backstop all of it. You're going to keep your money. And the only way to backstop that money is to print more. So, that is a very big difference, and it's a big sea change.
I mean, the odds of the Fed, of the Treasury Department, and everyone printing out $16 trillion just to back up every single deposit is pretty low, unless there's like a, nuclear explosion somewhere, and then it needs to do this. But in the meantime, people still need to get their fiat to pay their employees and things like that. So right. I'm wondering how crypto necessarily translates to that, or is it sort of an exogenous variable, namely the Fed not raising rates as high as they would have, sort of spurring people to say, you know what, I could take a little bit more risk here. I could play the crypto markets a little more, and it's less about people using crypto for what was its intended purposes and more about its speculative purpose.
Well, let's be very clear. As long as Bitcoin continues to trade like an option, it's a speculative vehicle on what will happen. But when you look at all the underlying metrics, that probability is much higher. The market at these levels is still pricing it somewhere between 5 and 7%. So it's a very small, the market's still saying it's unlikely, yet the hash rate underlying the Bitcoin network is at an all-time high. Yet, if somebody averaged down DCA into Bitcoin, even if they started at 69,000, they would now be profitable. So, you start looking at what's going on, the number of users, the number of wallets that have held it for a very long time. You have a situation where the holders, the primary believers in Bitcoin, are not selling. Speculators buy, they sell, they move around, and new holders are coming into the market pretty much every day. We've had massive news stories that you guys have talked about that are really not reflected in the price yet. I mean, Hong Kong saying that retail investors there can buy large cap crypto is a very big deal considering where it's coming from. That's essentially an admission that from the CCP that their wealthy people are allowed to try to buy and crypto. Right? So that's a big deal. Fidelity opening up the ability for Americans to buy in their accounts. Bitcoin's price surging lately.
We're seeing also digital asset investment products totaling net outflows for a 6th straight week last week, according to CoinShares. So it seems that there is a bit of a spook in the markets for institutional investors. Nevertheless, what are your thoughts on, are you thinking that retail investors are the ones driving this market? And I have a follow-up to that.
Well, I mean, I think the CoinShares information is incredibly bullish, because basically what you're seeing is the normal fund flows that you would expect to be there in a FOMO, fear of missing out type rally isn't happening. What you have is slow and steady buying being met by very light selling. And essentially, if you look at the way a classic bull market bottom is formed and how bull markets are, it's the old expression is climbing a wall of worry. And the Bitcoin market seems to be climbing that wall of money, that wall of worry.
All right. What do you make of Balaji Srinivasan's
now, what kind of activity are you guys seeing on the
Coinbase?
on your
his $1 million bet that Bitcoin will go to $1 million in 90 days due to hyperinflation in the United States?
At least, what do you suspect? Is it institutional? Is it retail? What kind of
Can you hear me?
I hear you perfectly. I'm not hearing the anchor. I don't know why it just stopped.
Oh, okay, here. Can you hear me now?
I hear you now perfectly.
Okay, great. So my follow-up question to that was Balaji Srinivasan, he's the former CTO of Coinbase. He's betting that Bitcoin will hit $1 million in 90 days because of hyperinflation in the United States. So what are your thoughts on that?
I mean, look, it's clickbait, right? The fact is the banking system as a whole probably has a hole in its balance sheet, unrealized losses that are very close to Bitcoin's entire market cap right now. And the Fed has signaled the ability to backstop that. My personal prediction is the Fed will raise rates at the same time that they've turned the liquidity spigot on. And so the raising rates is a signal to tell people we care about, risk assets and we really want to control inflation. But the real thing that's going on under the covers is backstopping the entire banking system. And that is a very big deal because it's a sea change. I think it's the next Genesis event for Bitcoin, ready for the next stage in the rally. And I think that's what he's talking about. 90 days seems a bit extreme to me. But the truth is I would be beyond surprised, actually, if Bitcoin doesn't make another all-time high at some point in the next year and a half, or as we approach the halving, and whether or not we get to digital gold, which is the 500,000 to 1 million. I mean, I think it will get there. It might take a lot of years. It might be quick. I don't know. But the notion of hyperinflation seems a bit extreme to me, at least right now.
All right. Well,
and in terms of
Lawrence, do you have one more?
No. Yeah, in terms of activity, what are you guys seeing now and as to who do you think is buying more? Is it institutional or retail?
I think, like every other bull market in crypto, it's wealthy individuals. I hate calling it retail because it's not the Aunt Minnie in Minnesota putting $500 into Bitcoin that's driving the market. It's major players, family offices, individuals with lots of money who are starting to increase its allocation back to where they were before everything started with crypto last year. I mean, understand 28 to 32 was a trading range that held for quite some time, for many, many weeks, on the way down from the all-time high. First, it jammed into the 40s. And then FTX, then it went to 28 to 32 as more and more shoes dropped. You had Luna, then you had Celsius and BlockFi, et cetera. And then FTX jammed it into the teens. FTX was clearly an overreaction because it really had nothing to do with crypto. People sold what they had to sell. And as soon as they were done with that, people started buying it back. And that's where we are now, kind of recovering back to where we were last year with much healthier fundamentals in the underlying blockchain data.
All right. Some bullish sentiment from CoinRoutes CEO Dave Weisberger. Thank you for joining us, Dave. Coming up, the Supreme Court gets a taste of the crypto industry. We'll discuss why the highest court in the land is gearing up to hear arguments in its first ever crypto-related case later today.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Mark this day on your calendars, because today, March 21st, not 31st, March 21st, 2023, the U.S. Supreme Court will hear for the first time ever a crypto-related case. And to discuss it is a very special guest. It's none other than CoinDesk regulatory reporter Cheyenne Lagon. Wow, we got her. It is an incredible get. Welcome, Cheyenne.
Thank you, Lawrence. That was so much more exciting than the next few minutes of what I have to tell you.
That is not true, because this is probably the biggest news ever. What is it about? How is the Supreme Court now? We're going to hear the words maybe Bitcoin come out of the mouths of such esteemed justices as, I don't know, Clarence Thomas and Sonia Sotomayor and all these people wearing robes. A lot of people wearing robes from the 17th century or whatever, talking about 21st century money. What's going on?
That is true. That will probably happen, but that is about as exciting as I think it's going to get. So this is the Supreme Court's first crypto-related case, but it really isn't a crypto case. It's actually a really boring procedural argument about arbitration, which is sort of like an out-of-court way of settling legal disputes that doesn't involve, a traditional lawsuit that's settled in a court by a judge. So, Coinbase has become a recipient of a lot of class action lawsuits, ranging from, hacks and, marketing issues to, just they've had a lot of class action lawsuits against them. So basically, their terms of service, their user agreement, says that those disputes have to be settled in arbitration, so out of court. But a California court last year basically said that terms of service wasn't fair and that it was unconscionable, so that they allowed the lawsuit to proceed in court. So Coinbase appealed that, and a circuit court, which is the next level of court, upheld that, and Coinbase appealed again. So here we are at the Supreme Court. So basically, Coinbase's lawyers are asking the Supreme Court to pause both of these lawsuits, well, two of the lawsuits, as they try to push them into arbitration. So it's crypto related, but the outcome really doesn't have anything to do with crypto itself.
They spent more money on taking it to the Supreme Court than if they just did arbitration, I guess. I don't know. Who knows?
Well, Cheyenne, what kind of precedent could this set in the future?
Yeah, so I think that the people that are really going to be watching this are people who file class action lawsuits against crypto companies and crypto companies that have been hit with a lot of class action lawsuits. And this is something that we see happening more and more. I wrote a story last week or the week before about an NFT platform getting hit by a class action lawsuit. So, basically what we're seeing is these are becoming more common as, the SEC or another regulator says a token is a security or something else. Well, then maybe a company gets hit with a lawsuit saying they were selling unregistered securities. It's a problem for these companies, and it's something that will increasingly plague them. So I think that there will be people paying attention to this outcome, but just for the average retail trader, it's not like this is setting a precedent over what's a security, what's a commodity, the other big questions that are kind of plaguing the industry.
All right, exciting.
Yeah, nonetheless, Cheyenne,
I know what you're talking about.
Thank you for covering this hearing for us. We'll be looking for your updates on CoinDesk.com. That was CoinDesk regulatory reporter Cheyenne Lagon. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Meanwhile, the Filecoin virtual machine network upgrade went live last week, introducing smart contracts and enabling developers to design decentralized applications on the Filecoin network. Native token files surged 18% ahead of the upgrade before giving back much of those gains. Joining us now is Molly Mackinlay. She's the head of engineering at Protocol Labs, the company behind decentralized file storage network Filecoin. Molly, welcome to the show. How did the upgrade go, and what does it accomplish to enhance the Filecoin network for those who don't know what the Filecoin network is all about?
Absolutely. It was a great upgrade. We definitely had, smooth operations. There was, all network nodes were able to update smoothly. There were, I think, a couple of, developer tweaks. Suddenly there's smart contracts and getting everyone to be able to start transferring their Filecoin into smart contract enabled wallets and kind of like applications that can start making use of that Filecoin from a user deploy perspective. There were a couple early hiccups that were all resolved super smoothly and quickly. So big thank you to everyone who was part of that launch. And this is super exciting for the Filecoin ecosystem because for the last 2.5 years of Filecoin mainnet, we've had mostly just storage providers and folks storing data on the Filecoin network. And that's really what Filecoin is at the core here. We're trying to be a robust foundation for humanity's most important information, making sure that data can be stored in a decentralized network of storage parties. And what FEM brings is user programmability on top of that storage. So now anyone can deploy a smart contract that can start working with like liquidity solutions between storage providers and clients, that can start automating the refresh of that data within the network over time so that you can have very long-term, maybe even permanent storage within the Filecoin ecosystem. And that's a really exciting moment for the whole Filecoin community. Everyone was very, very looking forward to this. And it's been awesome to see kind of the uptick since launch. It's by far exceeded our wildest dreams. We were like, maybe we'll have 100 contracts on the network within the first month. And then we saw 300 contracts on the network within the first day. And so just been really amazing to see the early builders community take to the network and start deploying lots of really exciting applications. We now have auto-renewing NFT contracts that are making it so that NFTs stay on Filecoin long-term. We have AI generative art that is using compute over the data in Filecoin to create new like AI images for NFTs that then end up stored on Filecoin and are utilizing kind of the data and reimbursing the creators of that data to actually push that forward and have an ethical AI system that actually recurs value to the original creators when new AI images are generated from their work. And so it's just really awesome to see all of these new applications coming into being and deploying on Filecoin.
So if you've been on before and you've explained Filecoin, but I mean, especially now that you have smart contracts, can you explain the difference between Filecoin and, let's say, the Ethereum network? Why would somebody use Filecoin versus
or even
Ethereum?
AWS?
Totally. And I'd love to explain both of those. So versus, say, Ethereum, we are so excited about Filecoin and FEM because it works so great hand in hand with other blockchain ecosystems. We actually designed FEM to use the EVM runtime directly, so you can bring any smart contract from Ethereum over to Filecoin with no changes, and that enables really smooth bridging. And what you can get in Filecoin that isn't available in any other blockchain ecosystem is verifiable long-term, large-scale storage of data. And that, no other blockchain brings that verifiability, that large-scale storage. We have something like 13 exabytes of storage capacity in Filecoin that we are eagerly storing humanity's information into, and a network of decentralized providers that verifiably prove that they are storing your data over time. And that's what, compares to something like AWS, where now, instead of having to trust AWS and having a central point of failure on AWS, if your data is still resilient and stored, now you have a decentralized network of parties that you can resiliently store your data across, and you get proofs, verifiable proofs over time that your data is being stored correctly. And that's, very appealing for folks that really care about data resilience, that don't want to have a central point of failure, and want to have a distributed, diverse network of parties who are storing their data, and that maybe want something, from an NFT context, really want to verify that that data persists over time and, say, use it in other smart contracts.
All right. You kind of touched on this briefly, but what does the role of artificial intelligence play on Filecoin? And we've also reported in the past how you guys are launching nodes in space. How is the space project going?
Space project's going awesome. And really the intersection of those two that we're super excited about is bringing compute into the Filecoin ecosystem. So Filecoin has stored, I think over 600, maybe now over 750 petabytes of useful data on the network, and bringing compute to that data helps make it much more useful and actionable for all of the parties who are making use of it. And this really is exciting in the kind of like edge computing space for space as well, because you have all of this data that's being generated, say in the International Space Station or on a moon base, and being able to do distributed computation at the edge and only send back the results of that computation is also very, very appealing. And so we were just talking with some of the folks part of that space program a couple weeks ago at ETH Denver about the opportunities there to bring this decentralized computation into the space context as well. And so with AI, we're seeing just much, much more demand for generative compute over open data sets that can generate large amounts of data that you also want to store in large decentralized ecosystems.
Molly, I hate to say this, but you're combining AI and outer space and space satellites. I saw this movie once. It involved Arnold Schwarzenegger. Don't do it.
I'm very much here in terms of making sure that we don't release the evil robots on the world, and making sure that the sorts of AI compute
they have all our data.
is not evil. Yeah,
I don't want the apocalypse. Just
right.
Not today, not this week.
Hopefully, it's just more generative,
too close.
Valuable outcomes for us all.
Already.
All right, Molly, thank you so much for joining us. That was Protocol Labs Head of Engineering, Molly Mackinlay. Let's check in with Crypto Twitter for our tweet of the day. So Balaji tweeting in part this morning about his Bitcoin bet, his $1 million Bitcoin bet, everyone. Writing in short, the hyper Bitcoinization bet is a Simon Ehrlich style bet that is purely about settling an ideological matter. I did not propose the bet, but only accepted it. I have absolutely zero profit motivation. I am never selling Bitcoin for USD unless legally compelled to do so. And I am holding Bitcoin until the US dollar is no longer the reserve currency of the world, again, unless legally compelled to do otherwise. And so just giving an explainer of why he bet basically $1 million that Bitcoin is going $1 million to $1 million in 90 days. All right.
You bet it. You bet it. Stand up to the bet.
That's an expensive bet to make for something.
Don't make an excuse for not taking it. Yeah, well, as long as he pays, who cares? He's got to pay.
That's it for First Mover. Thank you, Lawrence. I'm your host, Christine Lee. Meantime, check out the hash at noon Eastern, and we've got all about Bitcoin at 3. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets right after this break.
Welcome to the Daily Forecast, Tuesday, March 21st, 2023. I'm Joel Flynn. The crypto markets pause for breath in early trade in Asia Tuesday. Bitcoin still just off those highs of over $28,000, where it's been sitting now for over a day. BTC more or less flat in the 24 hours to 9 a.m. Hong Kong time. Other major cryptocurrencies, though, seeing slightly larger falls. Ethereum down 1.3% at $1,740. Ripple, meanwhile, changing hands 2.1% lower, almost 38 cents. The global multi-chain economy, however, basically unchanged too. The forecast 500 index flat in early Asia trade, though Solana NFTs do continue to outperform. Research from CoinShares said digital asset outflows have interestingly continued despite recent price rises. The firm said that was likely driven by liquidity needs, though, rather than negative sentiment. The sideways trade comes as market fears have eased over the banking crisis. Regional lender First Republic Bank, however, saw its shares tumble yesterday after a credit rating downgrade. Major stock indexes in Europe and the US ignored earlier falls in Asia, though ultimately posting gains. Markets, of course, on tenterhooks ahead of Wednesday's Fed meeting. For a closer look at all those stories and more, do head to forecast.news. Also check out our YouTube channel for the day's deep dive. Rebuilding trust. If it sounds difficult, that's probably because it is. Faith in crypto has been shaken for some time now, but faith in traditional finance isn't doing great right now either. And while getting the world's economy to a place that helps everybody is probably the ultimate goal, how do we get there? Well, there's one thing that could help that hasn't been talked about for a while. DAOs. Decentralization has possibly been the most popular thing to emerge from the FTX scandal. Consistently, people have talked about the need for self-custody when it comes to your coins. But what about governance? Decentralized autonomous organizations have been trying to solve this for some years. Essentially, they operate with a community that votes on procedures. Participation is usually incentivized with tokens. The idea is that by democratizing governance, better decisions are taken, and the proponents of DAOs say they are more relevant now than ever.
When things operate in a black box, right, and when decisions are made by a few people with little to no accountability, like you end up always in these situations, or rather, I would say in today's, what we're seeing today.
One person in the middle of starting a DAO is Hannes Harmeles. Her Reinvent DAO is being built as an ecosystem that she says will help consultants build and work together. She says the unique structure of it means that it provides a framework that can help monetize different skill sets.
We live in a world where everything is quite hierarchical. And the purpose of a DAO is supposed to decentralize it. And the element of believing in the same trust and believing in the same vision and mission, plus utilizing the element of transparency of what a blockchain can allow to give.
DAOs have been around for some time, though. The first, in fact, called simply the DAO, was started way back in 2016. But despite questions around trust in governance, DAO enthusiasm has died down of late. Rick Porter, CEO and co-founder of Web3 social platform Discover, said in a CoinDesk article this month, quote, "Most are created by individuals or groups with a goal they believe others will share, but they often find that members either don't show up at all or don't stick around when they do." This is something Arjun Kalsi from Mantle has also encountered. He told Forecast that sometimes DAO governance can be an impediment to acting quickly as well. It is a balancing act, but people are learning and things are changing.
I think it's very early days for DAOs, I would also say. And like I said, they're undergoing their own sort of evolution in terms of governance and thought process on how to align incentives in a way that, everybody's incentivized in some sense to participate in governance.
Regulation and the law, however, are also big impediments to greater adoption. In September, the US Commodities and Future Trading Commission, the CFTC, sued the Uki DAO. It alleged that essentially the DAO was offering financial products without a license. And crucially, it also claimed that anyone involved in the DAO was responsible for the whole organization's actions.
We're utilizing token as a form of provide voting rights and governance. And at the same time, you are the contributor, you are also the owner within a DAO. So the legal consent part is something that I feel the biggest challenges. Then it goes to individual liability.
Some claim that dialogue and engagement with policymakers could help avoid situations like these, but education more generally also remains an impediment to greater adoption of DAOs, just as others say that it does for the rest of Web3.
What's required is for us to make it really easy for users to understand, to access, and to act upon governance. And if we can do that, then we will see a lot more uptake.
Porter, meanwhile, claims that building communities should come first and DAOs should come second. In his words, to, quote, support and serve their interests as they scale. And to that end, even the staunchest of DAO supporters concede that not everything requires decentralized governance. The prevailing attitude, though, is that DAOs can bring change to existing structures and improve governance beyond just Web3.
It could be the new way of structuring a company, a new way of structuring a corporate company event, in a manner of ESG or in a manner of any goals that we would like to achieve. And in my perspective, a proper ecosystem of DAOs can come in a format of centralized and decentralized structure.
And decentralization still remains the ultimate goal.
With collective ownership and transparency, you can ensure that there's equitable distribution of whatever value is created within a system. So decentralization is a way forward. DAOs are an implementation of this decentralized thought process.
All right, that is it from us for this episode. Do like and subscribe to this video if you want to see more content like it, and let us know your thoughts on what's happening with DAOs, with governance, down below in the comments or wherever you're watching.